Hello everyone, I'm Corey Mitchell with TradeThatSwing.com, and this is your forex EURUSD Day Trading Week in Review. We're going to look at September 23rd to September 28th. The idea of these is that I'm going to talk through my own thinking for the trades that I took, and then this does not mean that you should have taken the exact same trades. The idea is that you get the idea of the thinking process as opposed to the actual trades. Because if, let's say, I had interpreted the market a little bit different at a certain moment, my trade may have unfolded differently. I may have held it longer. I may have skipped a trade because I noticed something that maybe I didn't notice in real time. So we're going to look at the factors I did consider that I was looking at, and that's the important thing. We want to get better at our own decision making. That's why in any course I have, there's a section on reviewing and improving your own performance. So when I look at my trades, I'm looking at what was my decision making in that moment, what was I seeing, and how did I execute based on that. And that's how I determine whether it was a good trade or not how well I predicted the market, because I have found I generally cannot predict the market. What I can do, even though the strategies do have an edge just on their own for sure, but there is definitely an element of I'm looking at the market and I'm saying how do I feel comfortable trading this, and then that's going to be the best way forward for me to proceed. And then at the end of the week, like this, I can look at a trade and say, did I trade that well based on what I saw? So we can zoom in here a little bit toward the edge. And when these vertical lines are present, that means that's when I started trading. So this day this is September 23rd, some really big movement earlier in the session. And then it fizzled out a little bit coming in, like I wrote here, like it dropped 75 pips off kind of the start, and then it was starting to recover. Doesn't matter too much. I'm mostly just looking at the last little bit of price action. So these vertical lines are when I started. This is Mountain Time, so this would have been 9 a.m. Eastern Time. You can see up there, -6, and New York time's -4. So yeah, this would be 9 a.m. Eastern Time. So we won't talk too much about what was going on prior, but I will just kind of note the price action. And noting the price action coming in, if we were to measure out these waves, we can see we're only running about like maybe 4 pips, and then we have a little pullback. And then this one only moves up maybe a couple pips, and then there's a little pause, and this one moves up a couple pips, and then there's a pause, and a couple pips, and then there's a pause. So I like to notice these little themes playing out, right? Because I'm always using the same entries. Like 98% of my trades are the same entries, like TCs, double pumps, snapbacks, rounded tops, rounded bottoms, all those same things. But if I can pick up a little bit of extra information based on how the market's moving, I'm going to use that to my advantage. So we can see that the market isn't making big moves, but this is really nice follow through, right? Like it's not moving a ton, but it's having a little pullback, and then it's going for another run, then a little pullback, and then it's going for another run. We can also note the length of the pullbacks. This one was a little bit quicker, but we've having a bit of this tendency on this run up. Like when I'm starting, looking at this kind of trend, it's move up. It takes several minutes for that kind of pullback. It's more like a sideways kind of consolidation, little choppy. This one moves a little quicker, but it only went up like 2 pips. So if we move up 4 pips, a couple pips, and then when I get here, it also helped. I kind of started when this consolidation was forming, and so I like this in the sense that we'd already had a bit of chop. We started moving up just off the bottom of that consolidation, so that's kind of like a DP. I think we had the drop, a move up, another drop back to near the prior low, and we're starting to move back up. And we have this little couple bar consolidation. We also had this, what I like to call a magnet area above. we're running back toward a prior high. We've been away from it for a long time, right? This high was made here. We dropped all the way down here. So there's a good chance that there's some stop losses sitting above that level. So if we start approaching it, those stop losses get triggered off, right? If we touch it, and you see that, just that little pop above it, which is often what we see. So the idea of this trade was, we've already seen this kind of theme of a little bit of a move up with some choppy trading and then another move up. But we haven't been seeing big moves up, and we have a magnet area just above. So the idea of this trade was just capitalize kind of on what we've been seeing. Yeah, usually I'd ideally like a 2-to-1, 2.5, 3-to-1 reward to risk. But this is a very rhythmic type trending movement. I felt pretty comfortable getting in that there is going to be some follow through. That's what the market had been showing. If I don't, I lose. If it doesn't follow through, I lose. But we also have a magnet area up here. So even though it was a lower reward to risk trade, I put my target at 1.2 to 1. It's, I felt pretty good about this based on what the market was doing. So all I did was I took a normal kind of double pump, or you could even think of this as kind of a choppy TC pullback, but really it was the double pump. Drop, move back up, drop again, start to move back up. That's the variation part. A double pump entry would have been as soon as we started clearing above this candle high. Probably would have ended up right about the same entry anyway, but I waited for this little consolidation. Once that consolidation formed, that's when I liked the trade and said, okay, if we go up, we're probably going to hit that magnet area. I can use a small stop loss, gives me 1-to-1 or a little bit more. Okay, I'm comfortable with that. So that was the thought process of that trade. Now here, if we were to block out what happened after that, we're hanging out right on that prior high. So this is why I shied away from it a little bit. In hindsight, I look at this and I say, you know what, we did kind of hold above. This pullback barely went anywhere, didn't get back below. So I could have maybe done pretty much the exact same trade again right there. I could have done pretty much the exact same trade again there. Might have had a little stop out there on this bar, depending on how long that took to form. Because when we're looking at a trigger, I do not have an automatic order sitting out there. I am watching the price to see if it pushes above this candle. So like on this trade, let's go back to it for a second. When the price starts pushing above that candle, I'm not just instantly hitting the button. I'm waiting to see. I'm watching it. Does it move up and then quickly pull back? I don't like that. I'm going to wait a little bit longer. If it moves up above those candles and then keeps pushing up, that's when I hit it. So I'm usually in a little late. On average about half a pip, and I trade with pretty much no spread, like 0.1 pips. So there's, I'm waiting that little bit to see how it pushes above the candle. And so here, like on something like this, we had the pullback, the green candle starts moving up. If we move above that candle, we're going long. And so just depending on how long that little wick lasts, if it was a split second, I wouldn't be in that trade. If it moved above and then made kind of another little push, maybe I'm getting in right at the top of that candle. But we don't know. I didn't love it. Again, these 1-to-1 trades, we are kind of dealing with, a slow moving trend. So if I find one that I really like, this one I really like because in the magnet area, that was a little bit of an extra edge in my favor. Once we start getting up into this area, I don't have that little extra piece of confirmation. I don't have the magnet area sitting above. We still have this nice kind of rhythmic uptrend we've been seeing. So you could have hit each one of these for kind of the 1R, basically the same trade, but we don't have quite the amount of evidence we did on this first one. So I did opt to leave these, but possibly I could have been a bit more aggressive and got, another 1R there, another maybe lost half an R or an R there, and then got back in. I don't even know if that would have stopped us out, actually. Even if we got in there, depending on where our stop loss was, we might have been okay. So pick up another R or a fractional loss and then an R. So we could have hit this a couple times using that. And this is where the decision making comes in, right? I talked about that. So it's going into the trade. I'm deciding, am I okay with 1R based on the evidence I'm seeing? If you are not okay with 1R, if you have a very low win rate, then you might want to just stick with the bigger R trades. Generally, I do pretty good with these types of trades, so I'm okay. In my reviews, looking at these, I often win on them, so I'm okay with taking them. If you find that you're taking these types of trades and you end up losing on them when you try to just, sneak out 1R or something like that, then that's something you have to look at in terms of your own trading. So I'm not saying don't just copy what I'm doing per se. Look at your own results, and because that's what I'm doing. That's what I'm doing with my trading. I'm looking at how I'm performing relative to my own decision making and analysis at the time. So this was September 24th. Okay movement again, 5, 10, 15, 20, 25 pips of kind of movement coming into when I'm trading. Levels off a little bit, but of course we don't know that at the time. So movement's good coming in. Again, little drops, little waves, and so the first entry that I was looking at, this is when I started. So you have a move up, a move down, a slightly higher move up, a sharp move down. So we have a lower swing low here. So that is a rounded top, which I took. Then you have the pullback, waiting for the price to drop below a candle low. It does. And then it just stalled there, right, for 5 minutes. Is that the type of trade you want to be in? I was out long before that. I was out kind of around this I probably extended this box out too far. I was out on kind of around this red candle, this little one in here. So like just after a couple minutes, like it hadn't moved. With a rounded top, we're waiting for the price to drop. And if it doesn't, what does that tell you? It tells you the sellers are not strong. That is why we are in the trade, is because we are expecting sellers to come in. Sellers came in here, right? We had the pullback. The drop starts. We're expecting another one of this wave we just saw, and it doesn't happen. So I opted to close out that trade pretty early into that consolidation. But after 4 or 5 minutes of just if you're hoping that the trade drops at that point, you're now in hope mode. You don't really have a rounded top playing out, at least in the idea of that a rounded top is an opportunity, and what we're looking for is sellers coming in. If those sellers don't come in, then you're just trading based on hope. So now, so out of that one, a little move up, but then just pretty much a straight drop straight away. It's been pretty quiet in here. We had a little rounded bottom and a little rounded top. Price hasn't gone anywhere. Not too interested in doing anything in here. We're also getting a little bit quieter. We're at about 745. If we go back to 645, which is right in here, we've only moved about 10 pips. That is kind of lower end of movement. But kind of like the other day, a little bit, well, I wouldn't even say this is rhythmic, because by the time we start to see the rhythm, we've only had like one. So rounded bottom coming in here, but we had a bit of news right there. So this would have been an opportunity to go long, right? Drop, pull back, drop, move to a new swing high, but that occurred right at news. So that would have been a long if the news wasn't there, but it was. Then we get a snapback. So this is a little bit of whipsawing coming in here, which makes sense because we just had a little bit of news. We have a nice sharp drop, but then the price immediately snaps right back to the prior swing high. Note we also have that prior high from above, so we have a bit of a magnet area that we're moving up into. And this is, other than the lack of space, kind of, you know, sometimes snapbacks are more of like a V shape, like this. This one's like this, right? So usually, you know, you have a couple bars dropping and then a couple bars moving back up. This one's just one and one. But we still get that little consolidation, and kind of like that trade from the other day. It's like there's a bit of room there for me to put my target just above the prior swing high. It's not going to give me a massive reward to risk, but I liked it running into the magnet area. And obviously you could have used your 2-to-1 or 3-to-1, and that would have been just fine. What about on that other one? Would that, yeah, the other one, I mean, it would have eventually hit it. You could have used 2-to-1 or 3-to-1. And that's why I say you want to analyze your own trades, because I was very comfortable just taking 1-to-1 here. You might look at that and say, I could have got 2-to-1. I could have got my 2.5-to-1 on both those trades Corey took. Corey sucks. I could have made twice as much as he did. And that's good. That's what you want to look at. But based on, I try to minimize regret in my trading, so I'm always just thinking things through, and I'm like, how do I want to trade this? And yeah, and so both of these I felt very comfortable, very good, just, you know, taking my profit where I wanted, even though it was a little bit lower risk. What did I put in my note there? Obviously could have made more on that second trade, but price hadn't exactly been running while I was trading, and the target near the high is usually pretty good. Look at 642, that's right here, versus 333, right? So this was the prior high. We had this run in, and it stalls right away and then gets rejected, right? So that's when I'm always, that's in the back of my mind. Whenever that's why I look at the magnet areas, and I'll usually put targets pretty close to it, because we usually get a little pop through, but I don't know how big of a pop, right? So sometimes you get this where it pops through and then immediately reverses. Other times you get this little pop through and it keeps running. So to me, coming into this trade, I'd rather we almost always get the pop. So that's kind of, it's not 100% of the time, but it's quite often. So I feel that's the more kind of higher probability money, just kind of grabbing that money as the price hits that high. Or we kind of have that lower probability where we can put our target way out here, but you know, your win rate's probably going to be a lot lower on those types of trades if your target's way out here, because you're going to run into a lot of this scenario where it pops above and then gets rejected. Okay, so September 25th. You're probably thinking he's only gone through like 2 trades, and there's been a lot of talking, but this is the process. I mean, every single trade is I'm processing a lot of information. You have to, if you want to be adaptable to market conditions. And be able to trade well through low volatility, high volatility. You want to talk things through. This was a stunning trade, just as I was already logged in, but I didn't quite have my stop loss sizes and stuff set up, and I don't, if I'm not quite ready, I don't like taking trades, but this one was a beauty. So we can already see the slowing here. We have a little push down, a move up, a push down to a new swing low, a nice push up, higher swing high there, little pullback, nice small stop loss for when the price starts moving up, it goes below that candle, easy 2.5. And this is one where you have the magnet up here, so could have even gone for more, right? It's when the market presents those opportunities. So, you know, you could have stuck with the 2R, you could have stuck with 2.5R, or you could push it up there, you know, toward this, what I call a crotch area, kind of where the price reversed near the prior high. So this would kind of be the crotch area right around 1205. Or this magnet area just occurred, so I wouldn't say it's crazy strong, but there definitely would have been some stop losses sitting above that, and we can see that pretty big spike through that level, right? Because people who had gone short might have still been, they would have still been hanging out short thinking, oh, we're still good until it starts running. And then, everyone's getting scared. The buyers are getting eager and the sellers are getting scared. And then there's usually just automated stop loss orders sitting above swing highs and below swing lows. So those get triggered once the price moves in, helping push it further in that direction. But as we saw, sometimes it hits that level and then reverses. Other times it has enough steam to keep pushing through. So that was a beauty. This one, there was a TC right there, and I opted to leave it just because it was right on that prior swing high. So this is a really nice move up. And I like moves up. Really strong moves up are great for TCs. But I'm also kind of looking at, did it really clear? So obviously it popped those stop losses that were sitting above there. But has it at this point, right? All we can see is this green bar and this red bar. We don't know that next green bar is going to happen. Has it really broken above this prior high, or has it just kind of cleared the stop losses and it's still just sitting there? So to me, it was still just kind of sitting there. It had cleared the stop losses. It had hit the magnet, but it would have been a bit better if this had moved up a little higher and the pullback was outside this old range. That would have been a stronger confirmation to me. So we're only talking about a few pips, but to me, it was just enough to say, you know what, I'm not sure on this trade. And again, it doesn't matter what the market did after. It was my own decision making, and I was happy with my decision here. Even though the price did go up a little bit after, I probably could have made 1R or something there using a trailing stop loss. Well, maybe a little less. Because, stalled out. If we used the trailing, we would have got out pretty much where we entered. Once it started chopping sideways, maybe could have got out somewhere in here for a little profit. But ultimately didn't miss out on much. Because the price hadn't really cleared out of that area. So now we have two possible rounded tops here. So we have the move up, pullback, move up, big drop to a new swing low. And might have been a little quick on my entry here, but we start moving up and we did have a drop here. It's a little hard to see, but we do have a wick that drops below that candle. And like I said, it must have just held there long enough, or had, kind of dropped below the candle and had another little push, because that's when I enter. And then it just snapped right back up. And you can see I closed it early. So it tried to go, it failed, and I closed it early. You can stick with your original profit targets and your original stop losses, but generally I feel if I'm wrong on a trade, I will just close it. And this tried to go in my direction, and then once it started moving back up toward that stop loss is probably going to get hit anyway, so I may as well close it for a little less risk, or a little less of a loss. We get a deeper pullback, and now if you kind of missed that little entry, and it is a little obscure after the fact, the price just keeps running up, then we have a second rounded top entry, right? Because we're still at a lower swing high. That one, maybe I can even say maybe I just entered it a little early, right? The price didn't go very much below that candle. It didn't stay down there very long, and it snapped right back. So this is a good entry too for a rounded top. And it just ended up getting aggressively trailed out here. Would have hit full target after pullback, right? So it dropped only a little bit. And what I felt kind of conflicted about, this was during the trade. I felt okay about the trade overall because we had kind of moved. We were back in this old range when I'm taking the trade. We'd had our attempt to move up, tried to move up again, couldn't. Now we're rolling back over into this old range. So I felt good about the trade overall. But I didn't like, so I get into this trade here, and then it starts dropping, and it paused right at this prior swing low. Not that there's anything super important about that swing low, but when I'm in the trade and I'm kind of like, okay, well, how much is this going to bounce? If this bounces all the way back up here, sets up a double pump. Then maybe I can get back in, and or if it just shoots up, then we're back out into breakout territory. So I didn't. Once it kind of paused there, I didn't feel super comfortable. So I just decided to trail it, put above that candle high, got closed out for 0.7 R. This one, pulls back, so I get trailed out there, and then it doesn't go very high. We don't get the big DP pullback here, and double pump, meaning we had the bigger drop, pullback, drop, and then we'd stall out here, and then if we roll over, that might have been an entry. But instead, we just get this little bounce, and then it goes back to the low again, and it pauses there. And so I opted to, when it dropped below, take the short. I was maybe a little too quick. It shows that I was not convinced of this trade because it hiccuped, went up just a little bit, and I closed it out. It did end up dropping a bit, but it probably wasn't the best trade anyway. And I say that because now we've just, we're kind of narrowing in. This is like the third time it's kind of stopped at that level. So now we kind of have a situation where the price is either just really contracting and maybe not going to move as much, or, this level might be important and we start moving up out of it. Either way, I wasn't super convinced of this one. I took it anyway, but closed it out quickly, which shows, I wasn't super convinced. We get a move up, pretty much that prior swing high, but then no triggers to go long or anything like that. And then we have a sharp move down. So look at this move compared to these prior moves. So in my head, I'm thinking, okay, expanding volatility. This is good. This is what I like. More movement coming in. I can take advantage of that. Price is moving up, and we get a trigger at a lower swing high. I opted to take that. You can see my stop loss was much smaller than the candle. This wouldn't be worth taking if we had to use a really big stop loss, but I opted to use a small one. That's another thing you can look at in your own trading. I talk about this in every course I make. Looking at your own trades, looking at your own stop losses. Do I need to give it that much room? Corey says put it at the bottom of the candle. That's the starting point. Do I actually need it there? The trades that work out, if you notice your trades that work out, they often work out pretty quickly. They don't pull back toward the stop loss. So you can probably have less room. At least that's what I found with my own trading. Your own trades that you're taking may be different, and you can look at those and find where the best place for that stop loss is. But generally, I don't need because on something like this, if it doesn't move immediately in my favor, I'm usually getting out anyway. So a smaller stop loss is fine. This one was below the lie of the candle. This one was below the high of the candle. This one was above. But this one much smaller compared to the candle, and that's totally fine by me. I'm assessing it again, saying is my stop loss that I've been using okay? Do I want to adjust it? But this was, really starting to get a little bit bigger movement here. So I was like, okay, we're just kind of whipping up and down very quickly. So if I get into this, it should drop quickly. If it doesn't, I'm getting out very quickly anyway. If this didn't drop and started pulling back, I'd get out anyway. So that's why I was okay with the small stop loss, if that makes sense, because if it didn't move quickly in my direction, I was closing it out anyway. That was the decision, because I'm looking at this. Price is moving quickly. That's why I'm getting into the trade. So it does move quickly, and then just kind of stalled out here. So I was only going for, I believe, 1.5, maybe 2, and it got extremely close and then pulled back. Trailing whole time is price whipping up and down. So I was just trailing this one. Got close, almost hit target, and exited as it pulled away. So when it almost hits my target and then starts moving the other direction, I'll usually just close it. Not going short. So this was at a slightly lower high at this point right here, right? We had dropped, but we no longer have. So this one we had a lower swing low and a lower swing high when I took this short. If we would have taken this short, we now have a higher swing low coming in and a lower high. So two conflicting things. This one we have two downtrend. A downtrend is composed of lower swing highs, lower swing lows. An uptrend, higher swing highs, higher swing lows. So at this point, if we took a trade here, you're in conflict, right? Because you have a higher swing low and a lower swing high. So you have an element of an uptrend and an element of a downtrend. And we're basically getting squeezed in, right? Converging, trend not present, or we don't have two elements of a trend coming into a trade. And yeah, movement getting smaller. This wave was smaller than the prior wave. This wave was smaller than this wave. So if I can only get 1.3 on this trade, what are the odds I can make, even 1R on this trade if I would have gone short? Long's not really an option because we haven't had a higher swing high. Yeah, so that was the end of that day. 26th. Okay, bigger movement here. Speaking, lots of speeches today, not my favorite to trade in. Yet I opted to trade with the mind frame being that, I'm probably going to be trailing. I'm probably going to be a little more on the defensive. Yet if I can find some opportunities, let's take advantage of them. So I took this for a number of reasons. You can see. So there's a drop. There's a little pullback in here, but it's pretty much just a candle. But I did note it. So you could interpret that as a pullback or not. Up to you. And that's why I say, you always want to look at your own decision and your own analysis to assess whether you made a good trade or not. And I was kind of looking at it. And if you don't know, consider both. And then, so that's what basically I was doing. I'm like, is this a pullback in this wave or is it not? Well, either way, I don't mind taking this long. Because if it's just a drop, and then we pulled back in, we had a pullback, we moved up, we kind of have a snapback type entry here. We had the false breakout at the bottom. If we view this as a pullback, then we also have a rounded bottom in play, right? Drop, pullback, drop, move to a higher swing high above that little pullback, drop. This is our first signal to go long other than these huge candles. So either way, I felt pretty good about taking this trade. It did not work out, but I liked it, and I thought it was a good trade, right? We had this false breakout. It moved back into the old range. We're pushing up. Big whips. Let's not use the word whipsaws because I sometimes use those, but big movements up and down, moving very quickly, right? Boom, 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 boom. So, I like the idea that I take this trade and there's the potential to catch that, right? That's what's been happening. Instead, it goes the other way, which I would have not seen and I would not have traded, so it doesn't matter. But I like that trade for a number of reasons. Drop out of the old range. Now, this one looks like, what the hell is he doing? Like it's just all red candles. But in real time, and this is sometimes the problem with looking at a chart in hindsight, is that you miss some of these nuances. So when I'm watching this in real time, so we had the drop, and then this red candle here, if we zoom in, did pull back, right? Pulled back got rejected at the old range pretty much, and then pulled back. That could have been 50 seconds of that candle, right? So I'm watching this in real time, and I'm seeing a green candle forming in real time, right? This move up right here. The candle opened here, and it moved up. And I don't remember this trade exactly, but I remember that candle being green for some time, and me thinking this is a pullback. If it drops below, I'm going short. Now, the candle happened to drop and keep dropping before the minute of that one candle closed. Yet I'd still already been through the thought process of this is a pullback. If we drop below it, I'm going short. That's why I ended up going short here, even though it doesn't look like there was a pullback there. But in real time, there was, and it got rejected by the old range, and we started dropping again, and you can see what happened after. This one, you know, not going for a huge profit. It was just kind of like, you know, put it down here, kind of in between these magnet areas. Look at some prior waves down. You know, this drop coming in was about the same size as this drop coming out, and that was just the idea. Just make some money. Like I said, I was already a little on the defensive today because of all the speeches. So I didn't want to, you know, put a huge target out there and then have the price reverse on me, kind of like how some of these prices had reversed very quickly in the past, what we'd already been seeing. Again, at the very start of the video, I talked about kind of looking at how the price has been moving through the day, and if I can find any clues there as to how that might help me trade, I will use them. This really big candles here, and we're right at the low. So no real room to take a, you know, if you think of that, you know, probably putting even a 2 or 3 pip stop loss on that, that would put my target way out here, even for probably even 1-to-1 would put it well outside. So just not quite ideal. If it would have been a smaller candle there, maybe I take that short with a target near the low, but it wasn't. Nice run back up into the old range. Pullback in the old range. Trigger is also in the old range. So we basically had this dip out of this area. So we had this range going on. We dip out, come back in. Love this trade. It's also just a TC, right? Strong move up. And again, same kind of thing happened on one of those other trades where the price just stalled right at that prior swing high. I think on another trade a couple days ago. So that one, yeah, it stalled right at the low, and I was just kind of like, do I like that? I don't love it. And a few seconds later, it did a run, but kind of in real time, I was looking at this. Also, we had some slowing going on here. So huge green candles and a pullback. You know, 3 big green candles, a 10 pip run before, you know, we see a red candle. I'm in this trade and I see a 2 or 3 pip run up before a red candle. That's a little different, right? I was expecting, I took this trade because I wanted this. Once I didn't get it, and the market only moved up a couple pips and then stalled out, that's different price action than this. So, you know, I'd kind of decided this is what I want to see from the market. It's about, I like to be in control of what I'm doing. It's what I want from the market, right? So if it's not giving me what I want, I'm willing to get out. And ultimately it continued moving higher, but I don't really regret this at all. I wasn't going for a huge target anyway, just kind of above these swing highs, and it made it look, it kind of made me look bad in the sense too, because we also had these speeches and we're just getting a lot of spikes, maybe on like little keywords that someone says. So, you know, without the speeches, it probably doesn't look so bad, but you know, it looks like I missed out on a huge profit, but really I was only going for a small profit anyway. So we can only trade based on what we interpret at the time. And to me, this had just, it was slowing in real time. It had stalled out near this prior high. Totally fine taking that. At the end of the day, it's, you know, am I making money? And that's what matters. So final day. A lot to go through, you can see, just on a few trades. So this area here, nice rounded top in here. It could have gone short right there. I was just kind of logging in at that point. Also note this, you know, we did have kind of a ranginess going on here. That's going to play out or come into my analysis in a second. You notice I've talked about ranges and price moving up to ranges and out of ranges. And so this one, it breaks down and it's coming back up. Do I want to take a long here? So I know some people might have looked at this and said, ooh, nice little pop to the upside. I'm going to go long here. But to me, so we just chopped around here for like half an hour. Tried to spike up one last time. Couldn't. And then moved to the downside, broke out of that range. So this move just kind of looks like it's just kind of coming back to test that old range. So to me, there's not like a lot of room here because more than likely it's going to get rejected in this area because the price had already tried to go higher here and couldn't. So, I didn't like this long. Also, only a few pip move up. This was an okay drop, but just a little conflicted. So, there was, if you took that short, okay. But generally I would leave it because this down wave, doesn't make a lower swing low. Overall, though, you can start to see like we are, we've kind of made the turn lower, especially if you did have my analysis of that this area is now kind of a resistance area because we already tried to move up. We've dropped below it. We got rejected at it again. We're moving down. So if you took this one, there's definitely evidence for that. I was just a little conflicted at that point. I ended up taking one a little bit later. We start to drop, get the pullback. And I took it here, even though, these drops aren't very big. This one wasn't huge. But I took it because I felt we were now out of conflict. So we'd had this move up, and I was kind of thinking like, okay, is that a reversal? Like, I just wanted to see, like, are we going to get rejected there? And then we had this drop, and it didn't get below this swing low. So I still just felt conflicted at that point. My conflict was erased when we kind of broke down again. I was like, okay, like we're definitely moving down. There's no real question about that anymore. Here, this higher swing low, that's an element of an uptrend, not a downtrend. Once we had lower swing lows and lower swing highs, I was like, okay, it's go time. But small drops. So I noticed the last couple were small drops, so I used a small target. It was going for 1.5 to 1 and almost hit it and ended up just getting out as it bounced. This one pulled back just a bit too much. We have no real triggers in here. The trigger occurs over here, so we pretty much got back to that prior swing high. So in hindsight, it looks okay, but in real time, it was kind of a, is this a change of direction? If we got a little bit smaller pullback, then started going up, that might have been a long. We also have news there right at 8. So minor news or a medium impact news, but that just kind of nullified the short there. Same thing here. We drop, but we don't get to a new swing low. We have a lower swing high, but we have a bit of a conflict there. So we haven't made much progress to the downside. Not a great short there. Then we have a bigger drop. That's what gets me interested again, saying like, okay, kind of like before, I feel out of conflict now because we'd kind of had this little sideways range here, similar highs, similar lows, and then we break out of it, pull back, get rejected right at the what is now kind of a resistance. If you think of this as a little range, we broke out of it, pull back, gets rejected, start rolling over to the downside. But again, we had a little bit bigger wave here, but the theme has been small price waves. So again, I was going for 1.5 to 1, didn't get it. And it just stalled here again for like 3 minutes, and I just opted to get out. So that's the decision-making process. 45 minutes to describe, a handful of trades, all this information that I'm just like plowing through. But ultimately the thing is, I look at the information, and then in that moment I'm saying, am I okay with this? Do I feel fully aligned with what I'm going to do and how I'm going to manage this? Either I've decided that I'm going to use a small stop loss, either that I'm going to use a trailing stop loss. Am I comfortable with this? At that point, I could care less what the market does because I feel comfortable with what I've done. I've done my sort of analysis of the market. I've decided how I want to trade, what could unfold, and whether it unfolds that way or not. Now I know this is how I'm doing it and why. And that's what we want to get better at, is that thought process, that decision making. Because if we get better at that, it doesn't really matter so much what the market does, because then we're just improving our own decision making. And on a lot of these trades, I was right in one sense that they moved my direction, but I was also wrong on others. So it's how long you're wrong or right. Trading is not an absolute in the sense that you're 100% right or 100% wrong. You can be a little bit right and a little bit wrong and still make money, right? Like, is this, let's go back to what, so is this a poor decision? I'm a little bit right. I'm right on the direction, but I'm wrong on the magnitude. At the end of the day, it's like, okay, well, I assessed the information and I made some money, so to me that's a good decision. And same with like here, I could have made a little bit more. What about this one? If I had left this alone, I get stopped out. So I was right in that it moved my direction, but if you don't get out, then you're wrong. So people think of trading in terms of right and wrong, and it's going to go up, it's going to go down. But it's also about, time. It might only go up for 1 minute and then go down. It might go up for 2 minutes and then go down. So are you someone that predicts a big crash? If the market goes up 30% and then has a big crash, are they right or wrong? Well, it depends on how they traded it. Did they lose money all the way up? That would probably be bad. If they just said, you know what, I'm convinced there's going to be a market crash, I'm not going to enter, but once I see the signs of that crash, I'm going to enter, that'd be a good trade. So it's our own decision making, how we plan out things, and ultimately the result of those things that determine our profits as traders. So hopefully seeing this rather in-depth review of just a few trades really helps you see kind of the thought process that goes into trades and the decision-making process. So have a great upcoming week out there, no matter what you're trading. Happy trading.